everyone. Welcome to this week's edition of Mish's Market Minute. I am your host, Mish Schneider, and thank you, StockCharts, for giving me a weekly platform to talk to you about all things in the market. So with that said, I want to always go back. It's always good, especially after we've had the potential for things to turn back around after we found some level of support. And of course, the question on everybody's lips right now is, was that the bottom? Was that a tradable dip? And so really a lot of it has to do with the economy and what happened with the interest rates. So we're going to talk about that as well. But really at this point, we're in a situation where the economy has improved to a point, but it still remains very vulnerable. But the economy and the markets often are two different things. So what I'd like to do is go through some of the areas that we always look at to be able to see whether or not we think the economy and ergo the market are ready to go up from here higher, or whether we're in for more pain. So of course, I want to look at the Modern Family, NASDAQ, and some of the FANG stocks. Always important to look at that. The small cap growth stocks, we may actually just take a look more at the individual ETFs instead. Rising commodity prices, what's happening with the rates now that they've been risen by 0.25%, the dollar, and Bitcoin, of course, volatility. And we always have to look at emerging markets, which to date is still well underperforming the SPY and the US markets. All right, let's get started with the charts. So we're going to begin with IWM. It's always good to begin with IWM because, of course, this is the granddaddy of the US economy, but also very influential in terms of what happens with the overall market. And we did have, I mean, this is a very interesting situation right now. I can't even imagine something even more difficult than this, because it's one thing when you're trending up, it's another thing when you're trending down. It's another thing when you hit somewhat could be a bottom, but it stalls right at the classic resistance, which was support just a few months ago, now serving as resistance. What do you do? And that's what I'm hoping to investigate with you all today. So at this point now, what we can see is we basically broke down in the IWM. We can call it anywhere from 207 to 210, even up to 213. So 207 to 213 is kind of the area here that it could go up to and still just be really back at the old support level, not really showing any particular strength. On the other hand, if it doesn't even get past, let's say, this area right here of 206, 207, which on a weekly chart is actually where the resistance is on my exponential moving averages, then it could roll over even from here. We do have momentum clearing the 50, but no particular divergence. And you can see that we have a confirmation on a negative sloping 50 of a recuperation phase. So it's really important, especially as I'm doing this video on triple witching day, to probably have a little bit of a breather here and not get too aggressive one way or another until we get into next week. And I think that'll give us a lot of a clearer picture. If you're already long because you anticipated this rally on Tuesday of this week when things sort of reached an inflection point and started moving up, bravo. If you're not long, do not suffer from fear of missing out. Be a little bit more patient to Monday or Tuesday next week to see if we can get through these areas, in which case then I would say, yeah, good chance we get back up to 225, 230, or if we roll back down under this 50, in which case probably back to looking more at commodities and volatility. Now, retail is not as strong. And this is 70% of the gross domestic product. So if we're looking at the question of, is the economy improving? We had dismal retail sales. We had dismal consumer sentiment. And this really is the classic rally to resistance. So even though momentum is showing a little bit of a divergence here, and I love these ACP plugins. I talk about this so much. What's so amazing to me is that you have a divergence in momentum. You also, whereas in the IWM wasn't outperforming the SPY, this actually is, kind of shows you how weak the SPY is right now relative to the small caps. But until you really get over this 50-day moving average, and I would say even over this Bollinger Band here, really basically over 80, to me, I'm not all that impressed at this point, other than more of a dead cat bounce. Now, totally opposite of that is transportation, showing a remarkable amount of strength. So not only do we clear both the 200 and the 50-day moving average, you can see how close they are together, but we're getting an inside day, which means at this point now we're digesting the move. And at the same time, we are also in real motion, not nearly as strong. We haven't even gotten up to the 50-day moving average yet. And if we just look at some of the classic momentum going back here just a little bit, we still have some clearance we have to do in order for us to be really impressed. In other words, we have to get over this Bollinger Band, not only the 200-day moving average, but take a look at your leadership here. So it's starting to fade a little bit after looking really strong yesterday. Now that could just be digestion, but if there's any reason to be patient, this is it. Because if we can get back over this Bollinger Band and the high that we had on Thursday at 268.97, let's call it 269, then not only is it showing you that things aren't as bad as people would think, but it also makes you wonder whether or not the Fed should be more aggressive in terms of their rate raise. Now, if we move on from there, KRE, which is regional banks, interestingly enough, is not doing as well after looking like it had tremendous potential to go up, but it's just a big old whomping mess right now. I wouldn't know what to do here. It's underperforming. Certainly you can see here that the momentum is going down, as is the price. But what this really tells you is that as strong as you would think the regional banks would be in a higher interest rate environment, considering mortgage rates have gotten to 4%, we're nearly not seeing it in the chart. So right now, the financials, even the XLF, which went up this week, but now is back down, still not really impressing. So that banking situation, not so strong. And then if we take a look at semiconductors, now all you hear all over the place is semiconductor shortage, semiconductor shortage, semiconductor shortage. But NVIDIA actually is up over 5% as I'm talking to you. That's been the strongest indication in the market right now. In fact, even though it wasn't planned, let's just take a quick look at NVIDIA so we can actually compare it here to our SMH. This cleared the 50 and the 200, just eking out over momentum. So the momentum is not wowing me here. And obviously we could see that we're outperforming the SPY, but we still have a lot of resistance here. So I keep an eye on this NVIDIA. This is a great rally. Would I be chasing it up here? No. If anything, I'd be thinking that not only should I be taking some profits if you did buy, let's say, over the 200-day and 50-day moving average, and I'd be wary of a close back under 257, because that would probably tell me that this rally is over and we can go back down. How far, that remains to be seen. But heading back to semiconductors here, you can see that this is not matching it nearly as much because NVIDIA is one of the stronger stocks, but we did get a nice reversal bottom. We did even get a not quite perfectly clean mean reversion trade, didn't quite pierce the Bollinger Band here. It sort more touched it, but you certainly had it in price. And look at the resistance that we're coming into as well. So that's why if you had to put a number in your head, if you happen to be in NVIDIA, I would say 257 is it. Now let's move on here to the last one. I did a whole video on IBB and XBI last week, and man, was that prescient, because I did it on Friday of last week, which was the 13th. And if we go back to the 13th here, it was on this day. So you had Monday coming in lower, and then Tuesday, the inside day. And really you got your signal here on Wednesday when it took out the high of the day before. And it really didn't start clearing on the momentum until here, but it did have a divergence because it cleared the 50-day moving average before it actually cleared here on the price. And you can see the leadership. But the question is, what do we do now? Now, if you happen to have been a student of the video and you got in, let's say about 123.50, you have a $7 profit here, I certainly wouldn't be letting that turn into a loss. And I would say that if this is going to remain good, it really has to hold up above 127. So let's say I took some profit, I'd have my stop under 127 and be out. On the other side, though, if this is going to continue, you want to see the slope get better here, and you want to see this really continue on clearing this 50-day moving average, putting some distance between the 50 and the price. Now let's go to the next thing, which is, I said I was going to do some FANG stocks, so I want to do those very quickly. Here's Facebook. Facebook has had about as much bad press as one could possibly imagine, but there's been some news about metaverse, and obviously you can't completely dismiss Facebook because a lot of people still use it. So you're seeing here leadership, but you're still seeing a very weak momentum. We're very far from the moving averages, so there's no chance of a phase change at this point. The question is whether or not this is just a dead cat bounce in this particular stock. And so at this point, I would have to say most likely yes, because the momentum hasn't even gotten close to showing me that it's going to be strong. So I would say, looking at the Bollinger Bands here, you're going to look at maybe 217 has to clear in order for this to continue up, maybe up to 250. We got a lot of room. And if it can't and it gets back down under 200, then Facebook looks to me like it's still not done with its pain. Where Apple, of course, people love to buy Apple on every dip. I hear every newscaster, or I should say analyst I have ever on TV with, say, oh yeah, just stick with what you know, stick with the strong growth stocks. And clearly right now they look smart because Apple had a really good trade here and a classic, by the way, mean reversion trade. But now we're getting into some resistance, and we still have a lot of resistance up here at the 50. And you can see the momentum, although it's improved, is not that great. So same thing. If this can hold above 160, work its way up, maybe that means FANG stocks are better. The market loved the 0.25% rate hike, thinks that the Fed is still pretty accommodative. But if we break down under 160, I would be very careful. And I want to look at, actually, well, we'll take a quick look at Amazon. I know they said that they were going to split, not saying it in the price just yet. I don't know when exactly they're going to split, but nonetheless, Amazon did clear the 50, in momentum. And now, again, it's going to start to run into some resistance here. So to me, this is you see these dead cat bounces in these stocks, and then they come off. This one is more impressive because it cleared the 50. So really keep your eye on 30, 35 and see if this thing can get up closer to the 200. Amazon is not a stock I've been trading actively for many, many years, but I do find Netflix activity very curious, because even though we haven't gotten anywhere near the 50-day moving average in momentum, we're certainly closer to it in momentum than we are in price. So the momentum has improved. It's challenging the leadership against the SPY. And this kind of had a nice sort of V bottom here. Also, a beautiful reversal in price on terms of the mean reversion, not in momentum. So again, this was one I really wanted to buy. I had actually been talking about it a little bit. I wanted to get into it at around 348, but I kind of missed the boat, which I imagine a lot of you did with a lot of these rallies. So the question is, what do you do now? Well, we're certainly running into some resistance just a little bit further up. So I would say, can it get through 400? I doubt it. So would I be getting in right now? Probably not. However, if it comes off with the market and holds up above that 345 level, then at least you have a very good risk down to the under the low to see if not only the market holds, but if this has another shot of going up. And of course, Alphabet rounds out the FANG stocks, and you can see they all look the same. They all had this big runoff. Look at this one. This thing just went whammo to the up new highs, and then boom. This is a trading range, folks. I mean, this is what trading ranges look like. We got really nice bottoms here, but are they bottoms? Or is this just another launch pad from the bottom of a trading range to the middle of the trading range? Do we have what it takes to get to the top of the trading range? And that's why it's so important to watch the Qs right now, because that too, V bottom, good support down here, lots of resistance, not over in the momentum yet, but yes, showing some leadership. Such an interesting market. You have to look at everything on some levels, but you also have to be really, really careful about what you decide to pick and choose in terms of getting into. Now let's move over to the commodities market. Now, everything I've shown you has been in bear phases pretty much, and is getting a bounce in a bear phase. And so of course, everybody loves to run into something when it's cheap. But the question is Is it better to be buying bounces in bear phases, or is it better to be buying corrections in bull phases? And I like the answer on that one better. I say yes. So now gold had this big run up, and then of course all the way down, so typical of gold. And of course, again, if we put some history on it, we really went pretty much to the highs of what we had in 2020 and then ran into a lot of selling. I still think gold overall looks pretty darn good. I still think we have inflation. I still think we have geopolitical concerns to worry about. So to me, even though what I showed you gives you possible trades in terms of finding bottoms and seeing if we've actually got a tradable bottom, I would rather be buying corrections in things that are well over their 50, where I can say they're in a good, strong phase. Rather than think that gold has topped out, I'm just thinking, where is it finding support? And clearly you can see the support here is around 175. So if we continue to hold 175 and we can get gold back up, let's say even this high right here over 182.50, 182.60, I would not be afraid to go back in. Now, momentum has definitely come off, but certainly holding the 50-day moving average. And you can see it sold off in terms of its leadership. So keep an eye on that as well. If you have the plugins, you want to see this back over and outperforming the SPY. And let's go to DBA, because grains are also very interesting, but this is also soft. So this encompasses sugar, coffee, which are both up as I'm talking to you. Sugar gets through 19 cents a pound. I think that's got another leg up. It follows oil very, very much. Coffee, of course, had a major correction and is now trying to find some support. Wheat, though, is actually a little bit lower right here, but it's been consolidating kind of between 9.50 and 10.50. This, on the other hand, has come off. You're getting 2 inside days. Yes, it's shown weakness here, still above the moving averages and momentum, although it's come off, but just good old classic charting. If this can now take out the high of Thursday, as it's having an inside day, as I'm talking to you, 2168, you've got a pretty good tight risk down to under, let's say 21, or I would say at this point, I would just take a position and get out if it breaks under the 50-day moving average. I still like this very, very much. And finally, I'm just going to look at, when I say finally in commodities, I'm going to look at oil. Oil also had strong leadership. It's fluctuating. If you look at just the price of per barrel between $95 and $105 a barrel, does this have potential to go higher? Absolutely. There are certainly some fundamental reasons for that. But right now, after you had this gap down and then this gap up, you got good support around 71.25. You can even say down to 70. And if this can get back up here above, let's say 75.40, not too much higher, there's no reason why this can't go up. And of course, you have to think about the implications of the market if it does. So now let's quickly move over to the bond market. So this is the long bonds. So considering that they have raised the rate, and we've basically ended 40 years of easy monetary policy by the Federal Reserve, we're still obviously well underperforming. But look at this little mean reversion trade we got going on here. Broke the price and came back through the green line. It broke the Bollinger Band and came back through it. So the question is this a good sign or a bad sign? And that really is the question. Is raising the rate a little bit a good sign because they didn't raise it enough? Or is raising the rate a little bit a bad sign because it shows they don't have that much faith in the economy and it continues to spur inflation? TLTs will be interesting to watch. I want to see now if it holds this whole little consolidation pattern and gets back up closer to 135. Then, of course, we have to look at junk bonds. Junk bonds also had a nice V bottom here and a beautiful mean reversion trade right here. See it through the green line on price and through the momentum on real motion, which means if you were watching, you could have gotten in down here around 80.50, and now you've got a couple of dollars. But look at this. You're now running into more resistance up here, and you have even greater resistance here. This is the classic risk on, excuse me, risk off indicator. And so What happens now from here is very important. If we can continue through 82.50, that's a good sign. But again, if we start to roll over under 81.50, it tells me more dead cat bounce. Okay, let's look at the dollar. Now, the dollar really doesn't have much of a relationship to anything. But one thing I want to show you that I looked at yesterday, and even though it's not ready yet, got me very, very excited. So I'm going to look at this a little bit differently today. I'm going to show you FXE. I'm going to show you a weekly chart, and I'm going to go back a little bit here. Here is 2017 low of 146. Here is 2020 low of 164, and here is 2022 low of 167. You have a 5-year span of triple bottoms, but triple bottoms are only confirmed of triple bottoms if they actually do something. So I have, rather than my eyes on the dollar, I have my eyes on the euro, which is definitely more tied to the dollar than anything, to see, and of course we have this mean reversion trade here. So if you really wanted to do it on a, hey, maybe, what if Mish is right kind of thing, you could buy it based on the mean reversion trade right here. See how it's coming through the momentum and the price, and just get out under this 146. Or you can wait for a little bit more evidence that this truly is the bottom. And this is a weekly chart, but wait for this to get over 104.50, 104, 105. And if we go back to the daily, that would also mean that it would be getting back over this 50-day moving average. So you see here why I'm so excited about right now watching the dollar and the euro. Okay, let's go to Bitcoin. Quickly, clearing the 50-day moving average, consolidating here between 36 or 38 and 43, 42. You got your range. I'm waiting for the great decoupling here. I'm very, very bullish longer term in Bitcoin, but it's got to get itself going. So right now, just keep an eye on how long it holds here over this 50-day moving average. And if so, can this finally get back over, let's say, this 41, 42 level? And then I think we could see some more buying coming into that. I just want to show you VIX. Real interestingly enough, that had a weird move this week. This was a backwardation move that happened, but nonetheless, it's a great indicator. Whoops, cannot find VIX. Let's see if it goes like this. Okay, this is not the cash VIX, but let's just show you this one. So VIX, this was this big crazy day, right? It was like actually halted trading. But more importantly, forget about all of that. We're just measuring it for fear. And the VXX is up, while the cash VIX, and that's really what I wanted to show you here. Let me see if I can get that. VIX.X. No, okay, let's put a dollar sign in front of it. No. Nope, okay. Clearly, I don't know what the symbol is here on StockCharts. But nonetheless, if I'm looking at it on my chart here on TradeStation that I have to me that you cannot see, what it's showing me here is it's under the 50. So there is definitely a disconnect between VXX and VIX.X. But nonetheless, basically, we really are, again, confirming that the market doesn't know what it wants to do from here. I'm still gun to head thinking it's more downside, but then we'd want to see that VIX really start moving back up over that 50, let's say back over 27 in the cash VIX. And finally, I'm going to show you emerging markets, because emerging markets to me are also really interesting here. You've got not quite a good mean reversion trade because it never pierced that Bollinger Band, but you are getting once again into some classic resistance, very poor leadership. And of course, we are nowhere near the 50, but the momentum at least is leveling off with the price. If I just bring this back a little bit, look at how much resistance you have up here. So I would keep my eye on the emerging markets too as a sign on the pressures of the Ukraine, on inflation, on China, on oil, and all of that, because if emerging markets can't get going and they start rolling over, they could also be a lead indicator that the US is not far behind. Okay, hope this was helpful to you. You all have a great weekend. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.